Well, hello and welcome to another Natter That Matters, and today it matters a lot. I'm here with the wonderful Natalie Barlow from Best For You Mortgages, and well, it became a thing because I said to Natalie, is it really the case that people can't get mortgages now? Because we're seeing all this press with these worrying times, troubling times, and Natalie said, no, they can get mortgages. So I thought it might be a good idea for us to have a little chat about it. So welcome to A Natter That Matters, our lovely Natalie.
Hello.
A Natalie That Matters, I might call this one actually.
It's a Natters That Matters.
Natters with Natalie. How are you?
Yeah, very good, very busy. Doing all my mortgage applications.
Yeah, still doing them then, yeah.
It definitely hasn't slowed down here at all. If anything, people are having to wait almost a couple of days before I can get back to them just because of how busy it's getting. But so the purchase market has more or less stopped. It is still possible to buy houses. The main thing is you just can't go and view them. So any that are in the pipeline still, it's possible to keep them going, especially people that've got mortgage offers already. It's just a case of exchange and completion. They aren't seeing it as a necessity to move house. So it's just a case of there might be empty houses, in which case you can take them on. But the remortgage market is very much buoyant, and there is still a lot you can do. Now, we've got lenders that are pulling out left, right and centre, but they are the big boys type things that have problems with adverse credit. So you've got different types of banks and building societies. So you've got your mainstream ones like the Halifax, Santander, Virgin. They've all got emergency funds to back them up, and the government will always look after those type of lenders. They've also got savers they've got to look after, so they're very much set up, massive companies, massive call centres. They've been able to deal with existing clients, look after their payment holidays, all that sort of thing. The smaller lenders, so basically they buy their money from in tranches, and then once they've sold it all off at a new rate to the likes of you and someone else, they then go and buy another tranche of funds. Now what happens at the minute is the smaller lenders, the likes of Precise, Together Money, you might have heard of some of those, they're a bit too small to cope with this, so they've just had to put a stop on everything so that they can look after their existing clients, check they can answer their phones, make sure they're all okay, because the last thing they want is lots and lots of people to stop paying their mortgages, get into mortgage arrears. They want to be able to talk to them, get them back on, or keep them on track.
Yeah.
So in order for them to do that, they've stopped all lending, and that unfortunately means anybody that already had an application in with them before mortgage offer, they've pulled those applications as well, which is hard on us.
Smaller lenders. This is not all lenders.
No, so this is your smaller lenders. So, but if you've paid valuation fees, those sorts of things, you should get all them refunded because it's not your fault that they've pulled out on you. But if you've got a broker, then go back and see your broker, because they should hopefully find you another lender. Now, at the start of the week or last week, a lot of the lenders like Halifax, Santander, all those sorts, was sort of saying we're stopping all borrowing at 60%, which is fine, because the main thing of that is that when the lenders used to go above 80%, I don't know if you remember MIG, which is Mortgage Indemnity Guarantee. So the lenders, they still do that, but you just wouldn't know that they use it. So they pay for the insurance policy now to indemnify themselves against the very high risk people.
Right, okay.
But because now they can't afford to do that because there's too much risk involved, they've brought the loan to value right down.
Yeah. So
if you're somebody that's got a lot of equity in your property, you'll have no problem getting a new mortgage, obtaining a new fixed rate. And we've got some amazing 2-year, 5-year and 10-year deals. I think I did a 10-year deal the other day at 2.2%, something like that.
Because they've already been paying the mortgage, they've already got a history. So yeah, they want them, I suppose, don't they? Because
and also as well, this is a good time to do a remortgage, because at the minute, hopefully everybody's March pay slips are normal.
Yes.
It's after that. So if you've been furloughed, they're not going to decline you. What they want to know is what your salary is, who you work for. They'll just use a bit more common sense. So there might be like a pub, for example, if you work for a chain of pubs, they know they're going to reopen and you're likely to get your job back.
Yeah.
It's going to be the other companies that could possibly shut down during this. The underwriters will just use a bit of common sense, double check if you're furloughed, when the likely chances of you going back to work, all those sort of things. So
make sure there is still a job.
It's still affordable.
Good advice. Remortgaging, of course, because I suppose most people are not thinking about that now. They're just trying to get through stuff. I mean, some people are still operating as normal, aren't they? They're still working. They're working from home, and you know, there's such a lot of fear-mongering, scaremongering that, oh my God, none of us got any money. Some people are being very adversely affected, in which, of course, we're all very sad for, and you know, really feel empathy for. But there's a lot of people still operating as normal, and it's important for us to all operate as normal as we can, because we need to keep the economy going and the property price market, and you know, all of it really. So yeah. So if somebody wants to remortgage, and some people probably have never remortgaged actually, I think, you know.
No, well, it used to be. I don't know how. I often meet people that have got all their eggs in one basket. So their bank accounts are nationwide, their mortgages are nationwide.
Yes. My parents
savings
like
are nationwide, their credit cards are nationwide. They daren't leave nationwide. Now, nationwide, it's lovely to say, and I do lots of mortgages for them. They don't care if you leave them. No. They will offer you a new rate, but it's worth checking whether that rate they're offering you is better than what another lender might offer you. Now, they can be a little bit more long-winded, but if you can save an extra £50 a month by moving over the next 2 years, that's a lot of money. So it's a bit like how you shop around for your car insurance every year.
Absolutely. And your utilities. You see, we're all a bit more accepting of the fact, let's see if we can get gas and electric cheaper. Whereas actually mortgages, it's a bit scarier, isn't it? Because like you could end up with no home.
I come across a client a couple of years ago who was literally robbing Peter to pay Paul, and she was paying something like £320 a month on the variable rate with Santander, and she was petrified of ringing Santander because she didn't know what questions they were going to ask her. She didn't and I was like, well, I can do it for you. I can do it online. I was like that. Let me just see what I can do now. I was like, I've got a rate here that's 1.7% for the next 2 years. Your monthly mortgage will drop to £130.
Wow.
From next month. So she's just immediately, and she cried in front of me because she'd been so petrified of ringing the bank, and just that fear of not knowing what they're going to ask. They think they're going to ask about your income and all your outgoings and incomings and all that sort of stuff, and they don't. If you're an existing client, as long as you've been up to date on your mortgage, they'll let you switch immediately with no questions asked.
Which of course most people are at the moment up to date with their mortgage, as you quite rightly say. So
and we can do that for people. So even if you've not an existing client of ours, just give me your mortgage account number. Most of the big banks, I can get straight onto their systems with your authority. I'll punch your account number in, and it will just immediately throw up all the rates that are available to that person. Now, some people might think, well, I'll just go and do it myself. And I'm like, that's fine. And my fee is a lot more reduced if I do it for you than over and above going to a whole new lender. But the problem you get is that if you can do it online, you know what you're looking for, you know what you want, and you're going to press the button and say, yes, that's what I want, that's fine. The moment you say, I'm not sure, what do you think? And then that constitutes advice. And then the bank want you to talk to them. And then that creates a phone call, which then creates a bit of fear, not knowing what they're going to ask, not knowing how to reply. And then you've got, and they can take up to 2 hours, these phone calls.
Yeah.
And well, now I'd imagine you'd be lucky if you get through to them in the next few days.
Yep. I've been trying to get through to a hotel chain to cancel a hotel. 4 hours so far. I've been trying to get hold of them on 3 separate days. I've given up actually. I'm just like, we'll just have to call them at midnight. Yeah, no, we can't get through to anyone because everyone's trying to do the same, aren't they?
Everybody's trying to do the same.
You've got more of a direct line because of course you're dealing with different people, I suppose.
Well, we've got our own access into their systems as an intermediary, so we can see things a lot quicker.
Yeah.
And we also as well, we know whether to. So that lady that I spoke to that I saw 2 years ago, it's coming up for renewal in 1st of July. So we're already looking now because lenders will allow you to pick rates now and not start it till July. So you can get today's rates, but it secures it for July. So, and
I suppose it's not just today's rates, it's based on your financial standing now, because of course in July it might be quite different. So actually it should be now that you're doing all this.
Yeah, so in this particular scenario, Santander, they had a nice 2-year fixed rate and a nice 5-year fixed rate. and she didn't want any new fees because my lenders will charge £999, they'll add it back onto the loan. But likewise, if you do it every 2 years and you're adding £1,000 on every time just to get a rate that might save you £2 a month, then it's obviously not worth it. So we actually looked at lots of different rates that they had and worked out that they've got a 5-year fixed rate at I think it's 1.79. So she's on a fixed rate of 2 years, 1.75 at the minute till July, and we've got her new rate at 1.79 for 5 years with no fees attached. Now if she was with Santander or Halifax, any of those big ones, if that rate that I was going to get her is lower, I could start it now. So the lenders will give you like 3 months grace. They'll allow you to jump off a higher fixed rate.
Wow, so you've got nothing to lose really then, have you?
No, for 3 months. But in this case, this new rate is slightly higher. So we've actioned it to start from 1st of July.
Yeah.
Whereas in another scenario, I might have been able to, well, I could have got somebody to start today if I'd have done it last week.
Yeah.
So it makes a massive difference. So
I suppose really, if anyone's not sure, they should just get in touch with you, and you can just ask them.
Well, I've got somebody else at the minute who's actually quite interested in a 10-year fixed rate. They're very busy people. One of them does work for the NHS quite high up. She's a project manager, so I think her life must be pretty hell at the minute. But I keep in touch as much as I can. I don't like hounding people. If people want to do the business, then just say yes, I want it.
Yeah.
But this 10-year rate, I told them on Monday. I'm still waiting for them to come back to me. The risk we've got at the minute, lenders are changing things so quickly that 10-year rate could be gone by Friday.
Yeah. So it's now, Zach now, find out now. So, and a lot of people I think are just scared to find out even, aren't they? It's like we don't want to, it's like, head in the sand, ostrich, not even sure, kind of a bit frozen, fight, flight or freeze. And a lot of people just freeze, whereas actually they should be just getting in touch with you really, or somebody, but you're here and available. So if you can pop when this goes out, you can pop your details in these so people know how to get hold of you, be it your email address or however else. And if you've got any other information you can share, and I'm assuming that you've got some sort of mailing list, so you're updating people as to what's going on, so that's coming straight from you, from a trusted source, not the bloke down the pub, because the bloke down the pub seems to think he knows everything, doesn't he? Not that we're allowed to go down the pub anymore, but there's virtual pubs, so the virtual pub people seem to think they know everything. But yeah, to get it from somebody that's actually on the front line and dealing with this stuff and knowing what's going on. So
just quickly, I know we talked about 60%, but a lot of the lenders are allowing intermediaries only to go back up to 80%. So we're an intermediary, we're a broker.
Okay, right.
If you go to Santander or Halifax Direct, they may only let you have 60%. Whereas if you come to us, we can get their products, but at 75. And
is that because they know you've done the due diligence, or you've got the history with the client, so you're a better bet? Yeah.
We're taking the risk and we're doing all the work for them.
I get it.
Mainly.
Cool.
So if anything comes back, we're the one that gave out the advice, not them.
So adversely, business is going quite well for you right now, Ben.
It is, fortunately, very busy.
Yeah, absolutely. That's great news. And I know, the money they save on their mortgage, they could pay on some insurance, because there's a lot of people not got the right insurances. And I know that we're going to have Cara on, who you work with on Best For You Insurance, to talk about how that works as well. So life insurance and all the other insurances that go with it, really. So yeah, it's there's
a lot of spending that's gone by the wayside because of this coronavirus. So do you know what? Just review everything that's coming out of your bank account.
Absolutely. I know. You did a live video, didn't you, earlier in the week, that was saying about that. Like, look at all the policies. I had a client, about 5 years ago, who said they had 3 insurance policies coming out of their bank account, and they didn't even know what they were, but they daredn't stop them. So they thought one was, what was the mortgages we used to have when an endowment? So one of them was an endowment, and they didn't even know how much it was for. Another was assurance. I think a lot of people have got small amounts coming out of their bank accounts, and they don't even know what they are. So
at the end of the day, direct debits can be cancelled, and more often than not, the provider, whoever they are, be that pet insurance, a charity, anybody, they will write to you because they want you to reinstall it. And they don't just stop, they have to give you notification. They don't just stop, and it's a good opportunity. Once you get that letter, you know who the provider is, you've got a policy number, you've found out exactly what you're paying for, you find out your cover, and then you can decide whether you want to reinstate it or think, oh shit.
Well, and they're likely to give you a bit of a preferential rate because you've already cancelled it. So to get you back, they might give you a better rate anyway. Absolutely cool. Wow, this is fabulous. Thank you very much. I'm like, it's a bit of a mystery to me, mortgages. You know, I think it is to most people. We just kind of know the bare minimum. So definitely best to come the same as you would if you don't want to try and take your own tooth out, would you? If you had toothache. So if there's a problem with your mortgage, get in touch with Natalie. She knows the stuff. I've known her a long time. I know lots of people that have done business with her, and she's pretty straight talking, as you can see. So she's not going to give you any bullshit either, which is what you need right now. So thank you for taking some time to be here with me.
You're welcome.
On A Natter That Matters, and I look forward to. I've just signed up to your YouTube channel, and I see your videos and things that come out on LinkedIn. So yeah, if you don't know Natalie, she's Natalie Barlow, Barlow. So go and connect with her so you can get all the information you need on your mortgages. And I hope business keeps booming for you, and that you keep helping those of us that still want to have nice lives and nice homes, because we're kind of stuck in them for a little while, aren't we? So let's hope. So remortgage can help with that sort of stuff as well.
If you want to raise some money to do some more home improvements you always wanted to do, buy a hot tub.
Buy a hot tub. That's me. That's what I want, a hot tub. And of course, they wouldn't have to come in the house to have it installed either. They'd just drop it into the garden, wouldn't they? And I don't know what
they do crane it in, but if you've got a gate, hot tubs often come in on their side anyway.
Do they? Oh, I have, yeah. I'd love one. Oh, imagine that. Bit of Prosecco, some candles, some music. Yeah, nice.
They are great.
Yeah, I'm jealous of yours. I want one. I wish I'd got one. In fact, I might go and get one. I haven't got a very big garden though, that's my problem, but it's big enough. I reckon it'd be okay. I've got concrete. That's probably all you need, isn't it?
Yep.
Wonderful. Looks like you've got company now. Look, there's a younger one. Hi. And we're just leaving. So thank you, Natalie, and I will see you very soon.
Yep. See you soon. Bye.